Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Wednesday, and you know what that means. Matt, the mortgage guy, is back. How you doing, buddy?
I'm doing great. And it's not just any Wednesday, it's Fed Wednesday.
It's Fed Wednesday. Yeah, folks. Topic number two, we're going to make our predictions, which is really funny because we're recording this an hour before the meeting, and you won't be seeing it till after the meeting. So we're either going to look really good or we're going to look like idiots. And I'm okay with that because that's pretty much every day for me.
Yeah, that wouldn't be the first time somebody called me an idiot.
Won't be the last either. Won't be the last. But what I wanted to do in episode one is really highlight how right we've been, because we've called for lots of things. And one of the things we've been saying recently, because we both said that mortgage activity could fall significantly and refi activity could fall 75%, is we thought that lenders would create more products. They would basically go out and look for niche needs and fill it. So I think some of that's happening already. Is that true?
Exactly. Yeah. And it's funny because right when I saw UWM, the largest wholesale lender in the country, announce a bank statement loan. And for anybody who doesn't know UWM, like they do fairly cookie cutter conventional stuff. Mm-hmm. They're not somebody who you would expect to do a bank statement loan, but they do a lot of loans and they do them well. They see a need in the market. When I saw them announce it, I immediately thought of you. I was like, we literally were having conversations around like, we think more and more lenders are like, exactly like you said, they're going to look out there and go, you know what, what's needed in the market? What's something that we can bring out that's going to help fill the void that refinance has left for all mortgage companies, all of them. Right. And I agree with them that a huge hole in the market is self-employed borrowers who I literally have the conversation every single day. And I had a conversation yesterday. Did you guys use my top line number, my bottom line number if I'm self-employed? Well, Fannie and Freddie are going to use your net income. If you've got write-offs, if you've got a great CPA, you might be depositing $40,000 a month in your bank account, but on paper you make $4 million. Yeah. So we're going off $4 million on what we're qualifying you for. No matter how much you tell me or promise or say, Matt, I can make a $3,500 a month mortgage payment, Fannie and Freddie are not going to qualify you for that when only $4,000 per month hits the bottom line. So, with that in mind, a hole in the market is what can we create for self-employed borrowers? United Wholesale Mortgage literally rolled this out today. They have their sales meeting at 9 Eastern. So just a few hours ago, and their account executives have been trained up on it. They rolled it out. I've got some initial information on it where they're going to go up to 90% loan to value, no mortgage insurance. You provide 12 months of bank statements minimum. I think you can provide 24 as well. We'll get more details later. And like a lot of lenders that do bank statement loans, they look at what gets deposited every month, right, versus tax returns and pay stubs. UWM is going to do this responsibly. They're going to require you to have 12 months of reserves. So, it's not anything like stated income loans. For those of you who are going to throw tomatoes and be like, oh my gosh, this is the beginning of the end. This is irresponsible lending. Somebody who's got a business that generates a bunch of money per month, in my opinion, a lot of these folks are in a better position to make sure that they make payments on time than somebody on a fixed $5,600 a month salary, where after taxes, they're taking home $4,200, from the state of California, whatever it is. So I'm going to make a video later today on this, but it's an example, like you said, we were right. Lenders are going to create more products and say, hey, market, we'd like to continue to do lots of loans like we did in 2020 and 2021. How about this product?
Exactly. And again, folks, this is just the beginning. I think self-employed was the right first step. I think that has been a hole in the market that has been, frankly, shunned the last couple of years. So it makes total sense that UWM would go there first. Congratulations to them. They're definitely the best in the business. But this is also why I feel really strongly that sometime in the next 6 to 12 months, you're going to have a Fannie Freddie FHA approved 40-year loan. Prices are going to go up, interest rates are going to go up, affordability is going to go down. And one way you fix that, just like your car loans, is they go from 36 to 60 to 72 months for car loans. They're going to go from 15 to 30 to 40 years. So we were right on stated income, and I don't think we're done. We're going to probably see some refinancing, and oh, heaven for, we might even see seconds come back. One of the things I think, Matt, that we're going to start to see, because a lot of people are going to have first at 2.75, they don't want to refi. Lenders are going to have to come in and go, you know what? Don't refi that. Let me give you a second. And I think that's something that's going to come out as well in the next year or so. What do you think?
Already there, like, yes, Symmetry Lending does a bunch of, home equity line of credit type of stuff in seconds. And, I talked to them a week or so ago. In general, mortgage brokers and folks in my position aren't doing a lot of these. I've got partners in what exactly. I've got partners in banking and small credit unions, and I'm telling so many people, exactly like you said, you've got 2.75%. Do not touch that. Leave that alone. You need 30 grand for this or 30 grand for that. That's not enough. If you owe 110 at 2.875 and you're pulling 150 out and it's going to go, towards an appreciation, that's a different conversation. But for a lot of people, I'm steering them towards home equity lines and giving them, just a referral, right? It's not anything that I'm personally writing.
Yeah.
But like you said, Symmetry is bringing this product to brokers and saying, hey, listen, you're going to have more and more folks. They owe 500. Their house is worth 1.4. They want 250 or 300. Write this second for them. We'll do it. Here's our guidelines. Yeah. And so, that's there. And
seconds are coming.
More and more are going to come on board. The bank statement loan, the debt service coverage ratio loan, some of this stuff for self-employed isn't new, but it gets your attention when it's a big player, right?
Exactly.
The smaller non-QM lenders are doing it, and they're doing, a few million here and there. When a company like UMortgage, who does 200 billion per year, has all the technology, has all the resources to do loans, fast and efficiently, then it gets your attention. And like you said, Fannie and Freddie and government agencies, when they start doing 40-year loans and all that, and it's like mass adoption, we're going to see some change. One thing, I was in a meeting last week that we talked about is there's already talks about FHA lowering their mortgage insurance premiums. They've got, God, what was the number? The number they have in reserves, because basically they're taking these mortgage insurance premiums and stacking them in an account,
of course,
to protect against default. They've got a ton of money, and I don't want to butcher the number by taking a guess, but it was billions on billions on billions, where I'm fairly certain whoever they've got, in charge, or the analysts, would say, hey, listen, if we go from 0.85 to 0.55 or from 0.85 to 0.4, we're going to be fine. We've got plenty of reserves.
Yeah.
Not much has defaulted in this environment where things keep going up.
Yeah.
And so, that's going to be, the same type of effect as a 40-year mortgage. Maybe not as dramatic as a 40-year, but it makes loans more affordable. Yeah. If your FHA loan that had a $280 a month mortgage insurance now has $150, that gives people more purchase power. That helps. And, we're not there yet, but if we try to make guesses about the future, a more balanced market, FHA probably makes a comeback. FHA is a product that, a lot of people haven't been able to use. Unfortunately, it's the borrowers with, credit scores that are lower. It's the borrowers with less down payment and less means that generally use FHA. So I'm rooting for a balanced market. I'm rooting for FHA to come back.
Yeah. One thing I forgot to do in the beginning is you have a very important announcement about a financial literacy week that I'm actually going to put in the show notes. Tell us about that.
Cool. I'm super excited about it. UMortgage is really passionate, and I align with that passion for educating the consumer. So it's free. You, your friends, your family, for me, realtor partners, financial advisors, anybody I can get the link to, you go and you sign up for Financial Literacy Week at UMortgage. It starts Monday, March 28th. It goes that whole week. And I'm looking at it right now. On Monday, March 28th, we've got basics of financial health, budget and financial habits, income, designing your career with money in mind. I've got, credit and credit cards, interest versus APR, some stuff on student loans, and experts in these fields talking about this stuff. I've got a buddy of mine in Utah who's a mortgage broker like I am, Jimmy Hobson, owns a bunch of rentals, works with a bunch of investors, going to talk about investment property stuff. I was trying to get our, Mike Zuber in there. I think we already had everything figured out on the calendar, but, even like crypto, blockchain, NFTs, the segment that I'm going to do is on refinance, because you probably know it as well as anyone else, Mike. I have been the anti-salesman in a period where a lot of refinances happened. Yeah. There's been great opportunity and a lot of good refinances written, and I wrote a lot of them, but I certainly haven't just taken every call as a sales call and said, let's refinance. Right now, probably as important as ever, like it's
be careful,
important to, on one hand, leverage it and use it to your advantage if that's the play, but protect your equity and don't make financially irresponsible decisions. I'm having a lot of conversations with people too, where they're like, how long can, folks last where everything they're buying is more expensive? The gas is more expensive, the food is more expensive, this is more expensive, that's more expensive. I know, because I get to look at people's finances all the time, that people make bad decisions. And I think, as a mortgage broker, as somebody who cares about people and trying to bring financial literacy to people, all of this stuff is important. I'm going to touch on the refinancing piece and think the do's and don'ts.
Awesome. That's going to be a great cause. And again, folks, I will put the link in the description. Thanks, buddy.
Yeah. Thanks, Mike.